Welcome everyone to Explain the Charts. Today is October 7th, 2025, and gold, XAUUSD, is the main event in the financial markets. Prices are surging to new all-time highs and are now knocking on the door of the historic $4,000 level. In this video, we'll break down the critical news driving this rally and then dive deep into the charts to identify key levels and potential trade setups. First, let's discuss the current events, because the macro environment is creating a perfect storm for gold bulls. The U.S. government shutdown is now in its sixth day, which is injecting a massive dose of economic uncertainty into the markets. This uncertainty increases the appeal of safe haven assets like gold. Compounding this, the market is now pricing in a highly dovish Federal Reserve. The consensus is that we will see two more interest rate cuts this year, one in October and another in December. Lower interest rates decrease the opportunity cost of holding non-yielding assets like gold, making it more attractive to investors. This dovish Fed outlook also acts as a headwind for the US dollar, and a weaker dollar typically means a higher gold price. So we have a powerful combination of a flight to safety and a supportive monetary policy. However, some analysts are urging caution. They point out that technical indicators like the Relative Strength Index, or RSI, are showing extremely overbought conditions, suggesting a pullback could be imminent. Additionally, U.S. stock indices like the Nasdaq and S&P 500 are also hitting record highs, which could potentially cap gold's ascent by attracting risk on capital. Now, let's bring up the charts and see how this news is reflected in the price action. Here on the daily chart, we can see the bigger picture. The long-term trend for XAUUSD is undeniably and powerfully bullish. We can see a clear upward trajectory for the entire year. This trend has become almost vertical in recent weeks, showing a massive acceleration in buying pressure. This explosive move higher, which really kicked off in early September, correlates directly with the increasing market certainty of the Fed's dovish pivot and the beginning of the government shutdown crisis. Let's zoom in on the price action just from September 1st. You can see the sheer force of this rally. The daily candles are long and green, with very few significant pullbacks or bearish days. This is the definition of parabolic price action. Gold has decisively broken out of what some analysts saw as an upward channel that was previously capped around the $3,600 level. This breakout has led to the explosive move we are seeing now. The most obvious and significant resistance level ahead is the major psychological barrier at $4,000. It is extremely common to see large-scale profit-taking at these big round numbers. Such profit-taking could easily trigger a short-term correction. If we do see a pullback from the $4,000 level, the first area of potential support to watch is the previous all-time high around the $3,900 level. A break below that would bring the $3,865 to $3,870 zone into focus, which was the peak just before this most recent surge. This area should now act as a strong technical floor. A more significant correction could find support near the $3,795 pivot area from late September. Now let's switch to the 1-hour chart to analyze the price action over the last few days. Here we can see the relentless climb of the past 48 hours in greater detail. The uptrend is incredibly steep, forming a very tight upward channel. Yesterday, on October 6th, the price surged with incredible momentum, breaking past several minor resistance levels. Today, we've seen continued buying pressure, but the momentum appears to be waning slightly as we approach that $4,000 mark. The bodies of the hourly candles are getting smaller, which can sometimes indicate indecision or exhaustion. This could be an early sign that buyers are becoming more hesitant at these elevated prices. We are also in extremely overbought territory on the hourly RSI, just as the news articles warned. Now let's drill down even further to the 15-minute chart for an intraday perspective. On this time frame, we can see the minute-by-minute battle between buyers and sellers. The pattern has been a strong push upwards, followed by brief periods of sideways consolidation before the next leg higher. This is a classic characteristic of a very strong, healthy uptrend. For short-term traders, the strategy has been to buy these small dips during consolidation phases. However, extreme caution is warranted at these heights. A reversal could be sharp and swift, especially with prices so extended from their moving averages. A key warning sign for bulls would be a break below one of these recent consolidation lows. For example, a break below the $3,950 support on the hourly chart could trigger a wave of selling. Let's go back to the daily chart to recap the key levels and discuss potential scenarios. To summarize, the fundamental picture for gold is incredibly bullish. A prolonged U.S. government shutdown and a dovish Federal Reserve are powerful tailwinds. The long-term technical trend is strongly bullish, with price in a clear discovery mode. The most critical level to watch is the major psychological resistance at $4,000. A clean break and daily close above this level would be an extremely bullish signal, potentially opening the door to targets like $4,200 and even $4,490 in the coming months. To the downside, initial support lies around $3,900. Below that, the key support zone is between $3,865 and $3,870. A daily close below this zone would suggest a deeper correction is underway, with a potential target of $3,800. Now for some unbiased predictions. Scenario 1 is a bullish continuation, where momentum carries the price through $4,000 this week. I would assign this a 60% probability. This scenario would be reinforced by any further dovish commentary from Fed officials or a lack of progress in resolving the government shutdown. Scenario 2 is a consolidation or pullback, where the market takes profit at the $4,000 handle. This would see a correction back towards the $3,900 or $3,865 support levels before the next leg up. I'd place this at a 40% probability. This becomes more likely if we see a sudden resolution in Washington or if equity markets continue their strong rally, attracting capital away from gold. Keep a close eye on the FOMC minutes release on Wednesday and any speeches from Fed members, as these will be major catalysts for XAUUSD. Finally, please remember this is not financial advice. All analysis and commentary in this video is for educational and informational purposes only. Trading involves significant risk, and you should always do your own research. Consider consulting with a professional financial advisor before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.